Hey everybody, Smart Silver Stacker here. It is Friday, March 11th, 2022, and we are seeing a bit of a rally in stocks today and a small pullback in gold and silver. And this is on some news that we got last night that Vladimir Putin had made a comment that there were positive shifts in peace talks with Ukraine. Although, personally, I think markets maybe are reading a little too deeply into those comments, particularly as this comes at the same time that Russian forces are closing in on Kiev, and there seems to be no de-escalation of hostilities on the ground. Not only are the Russian forces continuing to push deeper into Ukraine, but Russia is also now talking about bringing in volunteer soldiers from the Middle East. I'd expect most of these troops would be coming from Syria, a close Russian ally, and this is nothing to scoff at, as many of these troops probably have significant combat experience from the past decade of warfare in Syria. This is coming at the same time that American and British veterans are now entering the conflict as well, with Ukrainian President Zelensky forming his own foreign legion of troops. So, I don't know, Putin saying that there is progress in peace talks isn't really too reassuring to me, and I suspect that this market reaction is more wishful thinking than anything else. But again, the situation is very fluid, and at this point it seems like a wide range of outcomes still remain on the table. And I did predict in a video that I put out earlier this week that on any news of potential peaceful or diplomatic outcomes that we would see a pullback in metals, and this is playing out right now. But my forecast now is that on any serious escalation, we will see that trend reverse sharply. But aside from the conflict on the ground, there is a very serious development now in the theater of economic warfare. And that's what we're going to be covering in this video. So, let's get to it. First, I do just want to say a huge thank you to all of you for tuning into my video. If you get some value from watching today, please do give it a big thumbs up down below, and while you're at it, why not subscribe to the channel? So, the big development in the theater of economic warfare is that there is quite a bit of speculation at the moment that Russia is about to default on its sovereign debt. And this seems like quite a predictable outcome for a country that is in Russia's predicament. Here's a chart from tradingeconomics.com that shows Russia's foreign currency reserves, and this is measured in billions of dollars on this chart. You can see that at the start of this year, Russia had over $500 billion worth of foreign currency. But of course now, the vast majority of those foreign currency reserves have been frozen by sanctions. And if you've been watching my recent videos, you know that I've mentioned how many in the West have been celebrating the economic ruin of Russia as a result of these sanctions. I've seen memes going around about how worthless the ruble has become, and at the same time, those same people who live in Western nations believe, quite incorrectly in my opinion, that they are somehow immune to the consequences of these economic sanctions. Well, we saw earlier this week with that massive short squeeze in the price of nickel that there are far-reaching consequences of this economic warfare, and I do really believe that this was just the beginning. We've got Russia cutting off fertilizer exports now to Western countries, the price of food is skyrocketing, gas is at a record high, and now there's the possibility of a Russian debt default. And this is so predictable, it's so obvious. How is Russia supposed to pay off its foreign debts when its foreign currency reserves are frozen? And it's not like they can sell some of their gold to do it, as US lawmakers are now actively trying to prevent Russia from selling any gold with the Stop Russian Gold Act. And of course, why would Russia sell its gold anyway just to pay debts that it owes to entities in nations that it is actively engaged in economic warfare with? That would be ridiculous. So it does seem likely that Russia will default on some of these obligations, and that could be a serious problem for the Western financial system. PIMCO, for example, a large U.S. investment management firm, has exposure to over $1 billion in Russian debt. And it's not just investment institutions that are going to feel the sting. U.S. and European banks also have exposure to Russian debt. Banks in France and Italy alone have exposure to over $50 billion worth. At this point, what we've heard from the Russian finance ministry is that it will be paying its debts in full and on time. However, Vladimir Putin has stated that Russian debts to entities in hostile nations will be paid back in rubles at an exchange rate set by the Russian central bank. and that payments in foreign currencies will not be resumed until Russian forex reserves are unfrozen. Paying back those debts in rubles at a rate set by Russia is essentially a default. How are banks and financial institutions going to deal with this? Well, that remains to be seen. But as we have observed several times, like back in the 2008 financial crisis, the 2019 repo crisis, and in March of 2020 with you know what, Western financial institutions are not very resilient. In fact, there's so much fragility and leverage in the system that a small default can trigger a cascading series of events that leads to a financial catastrophe. So if we see a major sovereign actor like Russia default on its debt obligations, what will the fallout look like? At this point, it's anybody's guess. And, I don't have a crystal ball or anything, but it seems like all of this should be a pretty obvious outcome of this economic warfare that we've engaged in. I suspect that many people in the West are in for a rude awakening, and we may very soon find out just exactly how vulnerable we are to these disruptions in the worldwide financial system. And one thing's for sure, if a liquidity crisis does emerge as a result of a Russian default, we know exactly what Western central banks' response will be. They're going to provide liquidity, don't you worry. The Fed put is firmly in place, and the Fed, along with the European Central Bank, they're not going to let any of these too big to fail institutions go under. They're going to print however much currency they have to in order to keep the system propped up. The difference between now and the last time they pulled this trick is this time they're going to be doing it against a backdrop of already record high inflation and massively elevated commodity prices. And I don't think it's a coincidence that President Biden just signed an executive order encouraging banks and financial institutions to explore the role of a U.S. central bank digital currency, or CBDC, because this next round of printing and stimulus, it is going to be very big indeed. And you remember in 2020 the difficulties around getting stimulus payments out directly to the public? If we get another big recession, there are going to be more payments sent out to the American people, and it would be much easier to implement that policy if we had a CBDC. So that's on the way, don't you worry, and this Russian debt default could well be the catalyst for a market implosion that ushers in the advent of a U.S. central bank digital currency. Maybe not, time will tell, but I personally feel much more secure keeping some of my wealth in physical, tangible metals like gold and silver that are outside of this crazy Ponzi scheme financial system that we've got. And if you've got your wealth in precious metals in your possession, then this news of a Russian default is really much less concern to you than to the average American who has most of their wealth tied up in banks and 401ks and in equities. Now, will a Russian default trigger a cascading series of financial crises within the Western financial system? Maybe not. But the effect will certainly not be a positive one, and I believe that if this conflict in Eastern Europe continues to escalate, we are going to continue to see the economic fallout in our daily lives. And if this war grinds on for an extended period, that fallout is going to continue to become worse. Even just the elevated price of fuel and energy could be enough to trigger a massive recession, and if food prices continue to rise at the rate that they are, we may even see significant civil unrest. Who would have thought that 2022 would be the year that we see food riots in the West? Honestly, if the last 2 years have taught us anything, it should be that anything is possible, and we should all be getting prepared accordingly. And to me, from a financial standpoint, that means owning assets with no counterparty risk. And gold, even after today's pullback, is still pretty close to an all-time high. In fact, it did actually hit an all-time high priced in euros already, and I'm convinced that we will be hitting a new all-time high for gold in dollars as well in the near future. But take a look at silver. After today's pullback, it's back down to $26, almost half of its 2011 high. So today's prices are still a screaming deal on silver. And, I know a lot of you watching may be saying, oh yeah, but silver's manipulated by the banks, that's why it's so cheap, the price will never go up until manipulation ends. Well, to you, I say just look at nickel. Just because silver is being held down by naked shorts in the paper market, and it is, I think we all know that, there's a reason that over 367 paper ounces of silver are traded for every 1 ounce of underlying physical metal. But again, look at nickel. All those shorts will hold down the price of silver until they can't. And then they're going to be the ones to suffer after all these years of screwing retail investors when silver explodes in one of the biggest short squeezes of all time. You can bet on it. And I am, with physical metal. Of course, this is not financial advice. I'm not a financial advisor, but that's what I'm doing. What about you? What do you think about the possibility of a Russian debt default? What are you doing to get prepared? Let me know in the comments below. And if you like this video and you'd like to see more videos about economics, gold, and silver, then check out the videos popping up on your screen right now. Thank you all very much for watching. Stay safe and happy stacking. Smart Silver Stacker, out.